I think what is clearly driving is the size of the market. We have a real estate market, and if you take only the space occupied for offices, we're over 55 million square meters for the Greater Paris region, which is clearly the biggest market in Europe. And also the investment market is quite transparent and quite liquid, always quite liquid and quite deep, which means you have national investors, you have demand from international investors, from core investors and value-add investors of all kind. And I think this has been the case in the last years. And also, one has to say that we have a vacancy rate in the overall area which attracts a lot of investors. I mean, when you look at Greater Paris today, we have 7% overall vacancy, including all the obsolete parts of very heavily developed areas, very difficult areas, and of course in Paris we are below 5%, and we can consider that this is the equilibrium rate for the vacancy and for the market in France, which is quite rare right now in Europe, or has been over the crisis as well.
If you want to be a global investment house, you cannot avoid to be in France, and especially in Paris. And actually nowadays it's not France against UK or against Germany. The game is between the regions, the big regions in Europe. And as you said, the Paris region is the largest in terms of size for offices, more than 55 million square meters. And in terms of transactions volume, it's the second largest region in Europe, not just, but after London. And it's bigger than any other region on the continent. So if you want to have a pan-European strategy on the continent, you have to be in the Paris region. Besides that, the economic situation, which is often the thing that is to blame for France, is quite different if you look only at the Paris region than at the overall country. The unemployment rate, the GDP per capita, they are much favorable in the Paris region than they are in the whole country. And the global investors see that very well, and this is why they chose to invest in France. And we see huge amounts of liquidity ready to be invested here.
It's an interesting view to look at Europe, because we see a lot of capital from outside Europe, a lot of capital from Asia, Middle East, US today. And obviously the first point for them to invest is London, because they are familiar with the market. It's a transparent market, very liquid market. So they like this market, and we see a lot of capital going to London. That's the first step. And the second step then is to go to the continent. So they have choice, and they look at the very large market, and I think Paris, one of the large attractions, it's a very large and liquid market. And so they go to the Paris market, to the Munich market, Frankfurt market, and they have no so much choice. So we're starting a lot of transactions for Chinese investors, Korean investors, US investors, and that's what is interesting. So I think if Paris is really active in terms of transaction, it's because there is a new flow of money coming outside Europe, and there is a competition between national and local players like SCPI and this type of funds, but fighting now with non-European capital, and that's why Paris is a natural place for them to invest, and there is a lot of competition in Paris thanks to that, which is not usually always supported by a very strong letting market, but because the market is large and liquid, people like investing in Paris.